Everyday chat and chart live during the New York session. Here, real traders share the raw truth, their mindset, technical analysis, and execution. This is where real traders show their skill set. Welcome to Tradin TV. This is your stage to shine.
Hey everybody, morning. I hope everybody's having a great week so far. We can start here on the dollar index. So if you guys caught my stream last week, I was already I've been talking about this level in here for quite some time. So if we just take a look at our quarterly chart, right? This quarter is going to end in 19 days. And just overall, when we look at this price action, what I'm really seeing is just this break above the highs here. And we've really struggled to push higher than, 110. And we have this small consolidation in here. We've got to run above this high, and then the market's broken down. So again, as I've mentioned, this here is our market structure shift, or you can look at this swing low, right? Because we got a nice closure through there. What I'm looking for right now is just this retest into this quarterly fair value gap. And I do want to see this market trade lower all the way down to here eventually. Now, I don't know how long it's going to take to get there, right? Yeah, it took last quarter high and now it's dropping. Exactly. And when we look at the euro, right? The euro, we have some SMT because we didn't take out the quarterly low. So we have some overall strength here in the euro, which I've discussed at length. Here we have the daily chart. You guys can see here that we had this inverted fair value gap, right, after running out this high here. So we have this high here, ran that out, inverted this buy sign imbalance, and then trade lower. Here is another market structure shift. This is just consolidation. So all these daily candles that are, slowly trading higher, traded up into this volume imbalance, right? So we have a bit of a gap here, this close to this open, traded to that volume balance, and then rolled over. And as I've been mentioning, right, we have two candles that don't have wicks, but it does feel like we want to retest this one first. And we may not ever trade up to this level, at least the way that the market's trading right now, because this market has rolled over. You have market structure shift here, and the dollar just seems very weak right now. So overall, right, euro is kind of breaking out right now. Not really, but what we're looking at is this possible long-term consolidation. So you guys can see here the bodies of the candles. We're kind of just stuck in this channel right now, right? But if we get a nice push out of it, we could possibly see a leg higher, right? And where we target possibly these highs in here. So right now we are just going through a bit of consolidation phase, waiting to see if this euro wants to push higher and if the dollar wants to push lower. So this could retest into these levels before trading higher. I mean, today's Friday, so possibly not anticipating another new high on the week, but we have to pay attention to these bullish fair value gaps in here. It was not a profitable week for me. I mean, I missed out on the euro trade, and if we look at index markets are struggling as well. So if we just take a look at index markets, we have two levels in here. I was long yesterday. I only got like 2R out of this trade. I really thought I was going to go take out these highs in here. And then on the rollover, we've really gapped down. This is a very large gap. I think this was, 112 points, this gap lower. So we'll see if this down close candle wants to be respected. And then maybe this market will eventually turn around and take out this liquidity up here. But right now, we do have this level in here that is, in my sights. If not, maybe we'll trade to these lows down in here, right? We have this from yesterday. So we never took out the Asian range low. But, this is also a level of liquidity. I just think that it's going to trade to these highs more so than the lows. But right now, we are trading below the midnight open. If we can just look at the daily, right? The daily is really just stuck in this kind of holding pattern right now. So somebody was mentioning what they're going to be buying from February and March. Yeah, I mean, we'll see where the next markets want to go. I personally think that these markets are not done trading higher. I think they're going to continue higher, especially with the rate cuts. So we'll see what we get out of this market. I mean, right now it is ES definitely looks stronger, right? YM much stronger than the two. So we had this bullish engulfing candle. All right, we have this buy side liquidity. So this daily candle just traded down lower into these down close candles and then rejected higher, taking on this liquidity. But now that we're above it, maybe we get a bit of a retrace. Maybe retest this old high before going higher. Gold, I already mentioned to you guys that I've been bullish, right? We talked about this daily fair value gap last week, right? This is our consolidation, and then we took out this liquidity here. And I already talked to you guys all about us possibly trading to all-time highs. Right, so just based on the higher time frame, none of this really changes. And I mentioned to you guys that it could chop around in here for quite a bit, just like we had here. Now, I did mention this to you guys, did I not? If you were here last Friday, we talked about the market possibly going sideways in here, and then we get the expansion. But you have to be able to survive all of these sideways price action days, right, in order for you to take advantage of these. So if this 4-hour, kind of respects this fair value gap, then maybe we just anticipate higher prices in the euro. And right now, if the dollar really rejects this 4-hour fair value gap, it's going to continue lower. Because right now, this market is just creating lower highs, lower lows. I mean, here the thing with retail patterns is some of these retail patterns do work. Okay, like I'm not saying that they don't work. Trend lines do work with context. Everything works with the right context, right? But context is really what drives your decision making. Because at the end of the day, you're just trying to anticipate if the market is going to go higher or lower. So we have taken out a lot of sell side liquidity yesterday. So yesterday we took out a bunch of sell side liquidity, and then we got this nice rejection, and then this gap down. Now there might be a really big gap at the open, which we might want to go fill today. All right, the pound is trading down into this 4-hour fair value gap. So we'll see if we respect yesterday's low and want to continue higher. But we do have to overcome this wick here. Now, so like the problem with expecting bullish markets that are in a premium, right? And I've mentioned this a lot. When I'm trying to trade, I typically trade from internal to external liquidity. And I usually don't trade from external to internal. Because when you're trying to target internal liquidity, you really don't know where the market's going to stop. Right? If you were trying to trade from external to internal, right? Do we really know if this market's going to turn around at this fair value gap? Or could it have rebalanced even lower? But when you're targeting external liquidity, like this high or this high, when you're on side with higher time frame price action, it's more likely to go take out external liquidity, because if the market is going to continue higher, it is going to take out all of the external liquidity. Yeah, you really don't know which internal level is going to target. So right now we have a bit of a swing low on the 30-minute time frame on NASDAQ. And we are trading at a discount already. So we do have some equal highs in here above the Asia range high and the London high, which I think we're going to target. We don't really have news today. The news already came out for the pound. And I don't believe we really saw any major rejections. So we had this news come out 2 a.m. Market traded lower. We do have a candle here that doesn't have a wick. So this is our data high, and we might want to trade to that level. So again, my eyes are really on this liquidity up here. More so than the liquidity down here. But right now, yeah, index markets are kind of just in a holding pattern for the last 2 weeks, really. This has been a very difficult market to trade. No, I typically don't, I'm not very active during December. Thanksgiving in December, I'm not very active. Yeah, I mean, you can find a market maker model with a lot of different concepts. Because if you think about a breaker, what is a breaker? A breaker is the manipulation, right? Running out the liquidity. And then you get a smart money reversal at the low. And then you get a market structure shift. That's all a breaker is. Right? If you really break down what a breaker is, you have a manipulation, right? Manipulation below an old low, and then a market structure shift. That is your market maker model. Yeah, it's basically an engulfing pattern. Exactly. All these things, you know, all these concepts, they kind of intertwine with each other. That's why when I look at markets, I try and keep things as simple as possible. Really, the market is really just doing one of two things. You know, it's either going higher or lower, or it's going sideways. It's the patterns that you recognize that help you determine if a market is poised to go higher or lower. You guys want me to cover the DAX? I don't really trade the DAX. I would assume if euro and pound are going higher, that the DAX is probably looking pretty bullish. Take a look at it. All right, we're respecting these fair value gaps in here. If we get above this level, right, we're gonna get a breaker. No, so like Dixie, I don't really use Dixie when I'm trading index markets. I tried when I first started learning index markets, I tried to, but the index market doesn't really follow the dollar index as closely as currency pairs. I mean, I'm anticipating higher prices on NASDAQ. Right, we have a very long wick that's down here from yesterday. And we have liquidity that's resting up here. So when you look at all this daily price action, right, there's no market structure shift lower. So even though there are trades going short, this market hasn't given us a market structure shift lower or bearish fair value gap. None of that, right? So the way that I'm viewing this really is just accumulation. Unless it like really breaks lower and then we actually get a swing low broken. But this is my last swing low. Because none of these daily candles in here are swing lows. What do you need What do you need for a swing low? You need a higher low on either side of the candle. So like here, when you're trying to lean short, at least we have this swing low that's broken, right? This swing low indicates the market structure shift. I don't really try and get info from the talks from FOMC. I just try and trade the action. So here we are in a discount. We've already really traded to 70% of yesterday's swing. I trade engulfing candles on every time frame. The one that's more reliable is the one that is in sync with a higher time frame. Like yesterday, we had an engulfing candle, but obviously the daily is not bearish yet, so you guys can see that it fails. You know, I've already discussed why I'm bullish on index markets. Yeah, NASDAQ is US 30. I mean, so I pair all my trades with confluence. Like, what is the higher time frame telling me? Right? Are we in a discount? Are we rejecting fair value gaps? Does it make sense from a context perspective? You're trying to keep your trading as simple as possible, but you do need to have at least 2 or 3 confluence. I think when you try and wait for too many confluences, your trading can get very muddy and you're not really sure what you're looking for. You get analysis paralysis. Guys, I already mentioned I'm bullish on NASDAQ. Are you guys not listening? Because what is in here to support lower prices? At least what are you seeing in here that would indicate lower prices? Just based on a higher time frame. Do you have a market structure shift? No. Do you have a bullish fair or bearish fair value gap? No. Yeah, when you see your own analysis, because maybe you're blinded by your bias and you're not trading based off of what the markets are telling you. Right? Because if we just talked about gold, which I already talked about gold at length. If you're coming to the charts and you're trading against this idea of the market going higher, you have to ask yourself, you know, have we even broken below this bullish fair value gap? If not, then why are you trying to go short? Just because this candle turns around and looks bearish? Right? Instead, you're trading your emotions instead of what's actually occurring in the chart. No, I think if you were wanted to get gold, you probably already missed it. You probably should have been long inside of this bullish fair value gap. Why do I not have a payout on funding ticks? I just haven't really been trading prop like that. I haven't really been trading, honestly, the latter half of the year. I already, I've already overperformed what I expected to do this year. So really, I'm trying to trade slowly into the end of the year and reset for next year. As everything is the same. Candle range theory, whatever you guys want to call it. To me, it's all the same. Candlesticks haven't changed. Candlesticks have been around, I think, since like the 1800s, maybe even earlier. Why not go for more? Because that's very greedy. I expended a lot of energy on that run with Apex. And I feel like I don't have my edge right now because I'm just overall, I expended a lot of energy during that time period. And a lot of my trading, a lot of my profits year to year are made in just a very short window. So every single year I've traded, I've always had a couple months that really made my entire year. Yeah, I'm still trading with a brick and mortar prop. I mean, they've pretty much given me full autonomy over my trading. So nothing is really different from me trading personal versus prop. It's all trading. You have to manage your risk. You have to trade with some thesis in mind. No, I've traded volume. Listen, anything can work, guys. I think you guys, a lot of you guys are asking about different things. Just stick with one thing and learn it intimately. For me, I traded ICT because it kind of put everything into context for me, as far as liquidity and probabilities, order flow. But you can come to the same conclusion using different concepts. Your entries are wrong, but your direction is right. Well, you kind of have to figure out, is it really your entries or is it your trade management? Maybe it's your patience. So if I were to take a trade yesterday on the euro, really the entry was during London session. All right, so we have this dip into this fair value gap, and then it ripped higher. But if you're really just trading like the hourly candles, you could have gotten long below one of these hourly opens. Now that we've already traded higher, I just have a hard time thinking that the market is going to continue higher on Friday. Because we've already taken out this liquidity here. We've already taken out this swing high. But if this market is going to go higher, maybe this weekly candle closes here, and maybe next week trades lower first before going higher again. I mean, so when it comes to your risk management with prop firms, you got to figure out how many trades you're trying to take. That is suitable for your performance right now. Let's say if you're a struggling trader and you go on streaks of, 4 or 5 losses in a row in a short period of time, don't give yourself 10 trades because that is very difficult. Somebody's saying a 0.25%. So let's say if you get 3.5% of drawdown. If you give yourself a 0.25% risk, you have 14 trades before you blow the account. I mean, in an ideal world, you're not going to lose 14 trades in a row. Two to three trades per week. Yeah, that's... you just have to understand that it's probably going to take you a little bit longer. If you're a more active trader, I would say 1 to 2 trades per day. Keep it to 1 to 2 trades per day, and you should be fine. If you're down 6% on phase 1, how much drawdown do you have? Do you have 10% or you have less? And you have to ask yourself, like, what is your intention with prop firms too? For me, if I'm down a good amount in my eval, like, for me personally, because I can afford to pay for additional evals, I don't mind risking more. But if you can't afford new evals, you have to try and protect that account. If you're DMing me in Discord and I'm not your friend, I'm sorry, but I can't accept your friend request. I just have way too many people messaging me. You've only got 2% left in your drawdown. Either you try and risk more, try and get out of the drawdown, or you try and take it slow. It really depends if you don't care about losing the eval or not. If you care about losing the eval, then you should slow down. Yeah, I mean, if you're finding trades on the weekly time frame, let's say you're using an hourly or 4-hour, and you only find 2 to 3 trades per week. I mean, again, with futures, I would personally not risk 1% because if you only get 3.5% drawdown, which is like standard for most futures firms, it makes things, you're fighting an uphill battle, really. Yes, of course. You should journal your weekly plan on Sunday night. If you're an intraday trader, you should journal your plan for the following day. I took a long in the consolidation from the sweep of last swing point daily. What PO3 are we talking about? Or if we're talking about daily, there is PO3. Right, because if you look at these wicks, this is the power of 3. But that's occurring either overnight or on the rollover. Yeah, exactly. When you trade micros, you're just the thing with trading is that you're just trying to honestly you want to try and get to the point where you're trading a lot of capital. Because if you're trying to turn a small account into large amounts of money, it's much harder to do. Because you're not trying to hit home run trades. You're just trying to hit base hits across multiple accounts with more capital. So dollar is trading up into one standard deviation. We haven't taken out Asian range low. But this 4-hour candle still has 2 hours and 28 minutes to go. I mean, my model is very simple. I just try and come up with a bias, and I'm trading PO3, but I'm using different entry techniques. Either I'm using a breaker or a fair value gap. Nice, you're in Jersey. I don't really go to Jersey anymore. I used to live in the tri-state area, but still got a place in New York. Still back there every now and again. So a lot of times when you're taking trades that end up in a loss, and if you continued with that same bias, they ended up being a win, then maybe you have to look at your stop loss placement or the timing of your entry. I already gave my analysis on the euro. I'm still bullish until something changes, right? I'm still bearish on the dollar until something changes. You know, none of this analysis has really changed. I've been with you guys for a couple months now, right? And I've been discussing that I want to be bullish on foreign currencies for the last couple months, guys. Nothing's really changed because we're just going through a consolidation. You guys will find that my analysis, it doesn't change a whole lot. My analysis is done on the higher time frames. So I don't change my bias a lot. Because in order for the dollar analysis to change, we'd need to invert this quarterly fair value gap, which I don't know how long that's going to take. That might not ever happen. And I'm not anticipating it happening. But this is my analysis. I think dollar's going to go down to 88. And depending on how you guys trade, if it goes to that level, you know, that's 100% your responsibility to try and take advantage of that move. Well, again, the only thing that is not based on if something's going to change, you have to have some higher time frame level of invalidation. Where was the last swing low? The last swing low was all the way down here. So unless we lose this swing low, or unless we lose some swing low, nothing changes. You're just trying to position yourself long if this market's going to continue higher. Because this is part of the markets that it retraces lower and consolidates, and then it rips higher. If that puts you on the wrong side for days or weeks, then I don't know what to tell you because that's part of trading. If you're going to try and short a market that's bullish, right? Where's the asymmetrical risk to reward here? There are some days where the market trades lower, right? But then one day can make all of that back. The next day can make all of that back. You just have to, yeah, you have to go through it. You have to be able to trade through those periods. Like on NASDAQ. This market's just sideways right now. But what happens if this market is still bullish, right? The analysis is leading you to believe that it's bullish. And then a couple days or weeks from now, then it rips higher to all-time highs. And instead of you being on side, now you're offside because you think the market's bearish. So not only do you lose on your trade, but you miss out on the run higher. Yeah, on Fridays, you have to be very cautious because we already hit a higher time frame level. But that doesn't mean I'm going to short it because I'm not bearish. Now, it's different if you anticipate a Friday being a TGIF. Right? Let's say if you're bearish on the higher time frame and the market's trading higher, then you expect a TGIF. Like here, if you were bearish on the euro and it traded up into here, because this market is creating lower lows, lower highs, right? This is when you'd probably want to lean short. Then you get follow through on Monday, right? So here's Friday. This is Monday, Tuesday, Wednesday, Thursday. And then Friday hits a high time frame target and then it turns around bullish. Yeah, when I look at ES, I'm anticipating more strength there. NASDAQ is obviously lagging. But with how bearish dollar's been, you know, we may not retrace to these levels. It could still continue lower. In which case, you really want to see euro respect this high, right? We've gotten a close above it, kind of respect this high, and then continue higher. No, so somebody was asking, I only take 2 to 3 trades per pair a month as an intraday New York trader, but kind of seeing that 4-hour time frame is providing setups that I'm missing. Is this a sign to switch to the higher time frame? I would say you just need to stick to one strategy forever. And that's where I messed up for so many years, was that I was hopping around and doing things differently. And I would go through periods of losing streaks. I would go through consolidations. And then I would try and change the strategy instead of just trying to trade through those hard periods because it's very uncomfortable. You're going to have losing streaks, but you have to fight the urge to just change what it is that you're doing. Because once that market goes back into the conditions that you're looking for, now all of a sudden your strategy has changed and you don't capitalize on those opportunities. Right. And the thing with trading is that you're just trying to have a consistent strategy that you repeat forever. My processes don't change whether I'm going through a winning streak or a losing streak. They don't change. I come to the markets and I anticipate doing the same thing over and over and over again. And that's boring. Some of you guys don't have the ability to do that. Like your dopamine receptors are going off crazy because you're getting bored of a strategy. It's working for you. And I've discussed this at length even last week. I have my students do a simple fair value gap assignment. Just trade fair value gaps in the direction of a higher time frame. That's all they do, right? All they do is trade in the direction of the higher time frame. And I'll show you guys right now the results of somebody that only trades fair value gaps. Right? For 3 months, he's only trading fair value gaps with context. This is enough for you to find profitability. Do you need anything else other than this? No. You just take this and scale it. That's it. Yeah, if your strategy is boring, you're making money, that's all you need. Yeah, and again, yeah, it's unconscious pattern recognition. All you're trying to do as a trader is try and find characteristics that align with your bias. Right, so the euro, there's a weekly profile in here, right? The weekly traded lower. This is our low of the week. Traded down into that level. Maybe you're just trading engulfing candle. An engulfing candle that appears in the direction of your higher time frame. Where is that engulfing candle? Right here. And then you get the run. So you missed that one. There's another engulfing candle here, right? We took out the high and the low. And you try and avoid setups that appear in the opposite direction of your high time frame bias. That high time frame bias is dependent on the type of trader that you are. If you're an intraday trader, maybe your high time frame bias is just the hourly chart or the 4-hour chart. I'm leaning bullish on index markets, but we do have 2 levels that the market might trade to. I mean, right now, this market is really just stuck. So is it bullish or bearish? It's consolidating. So while I am leaning bullish, this market isn't really doing anything. Yeah, I would say regardless of your style, because even intraday when I'm intraday trading, I'm still trying to trade in the direction of the higher time frame, because that's where you're going to find the best risk to reward. Like imagine if you're trying to intraday trade short euro. Yes, there's small opportunities in here, but you're going to miss out on these days where it expands higher. Yeah, of course, you should be utilizing that info. Your worst days, your best days, the hours, the assets that you're trading. You should analyze all of that. I tend not to trade well during November, December. So what is that data telling me? Do I just show up November, December and try and put my foot to the gas and make something happen? No. I mean, it's proven data over 10 years. 10 years of me losing money. I just stopped doing it. And hopefully you guys recognize it sooner than I did. You know, that is proven data. I personally tend not to do well in November, December. So what makes me think that this is going to be the year where I outperform? For me, the best days are Tuesday through Thursday. I didn't have my best month in December. My best month was not in December. My best month was in March and April. I had a 6-figure trade last December, but I got that 6-figure trade at the end of the month. It was the last day of the month. When I started becoming consistent was when I stopped trying to learn everything. Oftentimes, you guys already have enough information for you to be profitable. And you just have to be comfortable with what you've learned already. Yeah, I mean, the Mag 7 is basically all the big names. I mean, you guys are asking questions where you guys have to figure this out on your own. There's no shortcut to this. You have to find out on your own if January is good for you. What does it make a difference if I tell you January's been good for me? Because I am in a group of traders where some months I've had my best months, and then my friends have had their worst months. And we're trading the same system. We're trading very similarly, and we're looking for the same setups. That doesn't have anything to do with your performance. Just because somebody has a good month doesn't mean that you're going to have a good month. Right? They're not correlated. So even you watching a profitable trader on stream doesn't mean that you can replicate the results, because your results rely solely on you. Yeah, everybody needs to find out on their own, and it's part of trading. There's no shortcuts to trading. Even if I teach everybody a specific strategy and I tell people, hey, I want to be long NASDAQ, and NASDAQ goes higher, how many people are actually going to make money with that information? You know, I gave you guys the information that I was long on Euro and long on gold last week, but how many of you guys paid attention to the stream, didn't take advantage of it? I didn't take advantage of it. Somebody else may have, though. That doesn't mean that I'm an unprofitable trader. It just means that everybody's on their own trading journey. I'm trading my own way. Other people are trading their own way. So the year that I started seeing real changes, when I just got tired of constantly learning new information. And now people bring up like, oh, you should check out this concept here, or do this or do that. I don't even listen to them. You know, when they say something, I basically just tune them out, because I already have a strategy that works. So like, why am I trying to change it and add new things? Every time you add something new to your system requires a whole new set of testing and analytics and work behind it. So like, let's say if I just start all of a sudden learning level 2 or level 2 footprint charts, order flow. You know how much time I have to spend to learn that when I already have something that I know works? To me, it's a waste of time. Yeah, just use my success as a motivation, but again, that you can't replicate it, right? Because you have to go in the charts and actually do it on your own. But what I would say is try not to get lost in all this information that you see online. It's too much. You can be profitable with something as simple as moving averages, market structure. And I know it's probably hard to hear that, but in general, less is more, okay? When you really intimately know the concepts that you're trading, that's really when you're going to excel, right? And then, yeah, it's just having discipline and consistency, repeating that process over and over again through the hard times, through the easy times. Because there are periods where your system and your strategies doesn't work. And the real test of, I guess, maturity is by not changing anything when things stop working. Just keep showing up and keep implementing the same process, because you know long term that the system works and that you're just going through a rough period. you get lost in market structure with different time frames and you question your bias a lot, always defer to the higher time frame. If the higher time frame is very unclear, then you probably shouldn't be trading. So let's say if the market has bullish market structure on the higher time frame and you're seeing lower time frame market structure go in the opposite direction, well, you're out of sync. And you should just wait patiently until the market structure that you're looking for appears. Right? So if I have a bullish bias on the higher time frame, I don't take bearish setups. I don't show up to the charts and see something that looks bearish and all of a sudden I want to short it. I don't do that. I wait patiently until I see something that aligns with my higher time frame bias. Because that's a high probability setup. Yeah, same thing. You always should defer to the higher time frame. The higher time frame will always supersede the lower time frame. Always. Which is why I bring up the quarterly time frame on the dollar. You know, nothing about this analysis has changed, guys. Even though the market has gone higher and done certain lower time frame moves, they're trying to get in sync for when it rolls over and then it really collapses. Right? So let's say if you're on the weekly time frame, you're expecting bearishness. You're just waiting until that market rolls over and then you get in sync to try and capitalize on these large moves lower. Because when it starts moving in the direction that you're expecting, it really cascades and it really pushes the markets. And that's really where you're going to get those skewed risk reward opportunities. Yeah. So there are opportunities on the low time frame. You just have to understand that you are trading against the overall bias that you're trying to trade. But your thing is, when you come to the charts, you have to be very confident in the setup that you're trading. Well, it doesn't necessarily have to take the last quarter high, because if you were looking at the euro, we never took the last quarterly low, right? And I think a lot of you guys are searching for something that is like sure. You want to be sure about markets, and I don't blame you. But you have to be comfortable taking trades and being wrong. And you can be wrong a lot. You can be wrong a lot and still make money. How do you combat the feeling of FOMO? By being in a good financial position, really, and detaching from the money. If you can detach from the aspect of trading money and you're just trading to trade, like when you put risk on, you should not be looking at your P&L. You should be looking at the risk to reward. So if you're analyzing your trading based on risk to reward, you remove that feeling of FOMO. Because you're just risking 1R to make 2 or 3R. I mean, I kind of just talked to you guys. I already mentioned how to detach from the money. This is a personal thing. I can give you tips, but you have to be able to go through it. And there's emotion behind your money, right? When you're trying to trade and create a better lifestyle for yourself and trade full time, there are pressures that you have to manage. You have to be okay saying, I'm going to trade because long term I have goals and I need to respect my risk management and I need to respect my capital and not just FOMO into trades. Because each decision that you make, right, should be in line with your long-term goals. You know, if you buy accounts, if you buy prop accounts, if you fund personal accounts, and all of a sudden you're just going all in on one trade, that is, to me, is not in alignment with a long-term goal. And I don't know if there's any way that I can't transfer my detachment of money to you. You just have to know that that's what you have to do to become a profitable trader. At some point, you have to detach yourself from the money. However you go about that is on you. Fear of winning. I've never heard fear of winning. Guys, I wrote on the chart here bullish. I don't know if you guys are joining late or what. I mean, don't look to me to come up with your analysis. If you're looking at me to come up with your analysis, then you have work to do. Look at your daily time frames. What is bearish about this? Do we have a swing low that's broken? Do we have a bearish fair value gap? Or is the market creating higher lows and higher highs? So until we get a swing low that's broken, until we get a bearish fair value gap, I just try and stay on sides until I have more information. You get to the point when you can't put any idea, even on your backtesting, having the fear that price can run against you, because you haven't accepted the fact that you can lose on trades. You have to be comfortable losing trades. You have to be comfortable losing trades. Because in your career, you're going to lose a lot of trades. You're going to lose a lot of trades. But if those losers put you on tilt, you have a problem. Right? You have an emotional problem. You don't have a trading problem. You have an emotional problem because you don't like losing. But with trading, you have to be comfortable losing. You're going to lose a lot. I lose a lot. I probably lose on half of my trades. Does that make me a bad trader? No, because on the winners, I just try and capitalize on those risk rewards. I mean, so like when you look at S&P, what do you see on the daily time frame? What do you see on the daily time frame? Do we have a swing low being broken? Do we have a bearish fair value gap? It's all this sideways price action that makes you think the market's going to go lower, but it's not really telling you anything. So just plot out your swing lows. Here's a swing low, right? And here's a swing low. Did any of these swing lows get a closure through them? No. So why are we bearish? What's the only other conclusion. Either we're going sideways or higher. And you are only trying to find bullish setups when the higher time frame is telling you long. Right? And this cuts out a lot of noise that you guys are seeing. You can cut out the noise and just only focus on the direction that you're trying to trade. And there are periods where you don't know the direction, and that's totally fine. Guess what you do when you don't know the direction? You don't have a clear understanding of where the market's going to go. You don't do anything. Right? When the market's unclear, you don't know which direction the market's going to go. You just sit still. You don't come to the markets and try and force bear setups when the market is bullish. You don't find... Here's what I don't do. Is I don't just try and find something else to trade. Yes, you could possibly do that, but it should be in your plan. You shouldn't just sit down on the charts and just say, I don't see anything today, because all your analysis should be done the night before. But what I don't do is I don't just show up to the charts and try and find something. Either I see it the day before and I want to trade it, or I don't. When I don't see anything across any market, that's when you step away. We just got an hourly closure here. We are trading up into this fair value gap, but if I'm bullish, I just want to see it trade through that level. And so we've gotten a closure above this down close candle. Then when it comes back to trading in general, you have to be comfortable taking losses, and you have to be comfortable with your analysis. Because I would rather have my bias in place and trade in the direction that I want to go and take a loss than go against that idea, because now all of a sudden I'm breaking my process and my rules. My face is a perfect circle. Thanks. I appreciate that. So for me, I'd rather take a loss going in the direction I want to go than taking a loss going in a direction I don't want to go, or even a win. If I take a win going short, if I'm bullish biased, that doesn't feel good to me. I don't care what the P&L says. Let's say if I sit down and I say I want to be long, and then I short and make money on that day. That doesn't feel good to me, and it shouldn't feel good. But you guys maybe are blinded by the P&L and think that that's good trading. But long term, that hurts you. Right? Long term, that hurts you. I use midnight open every day. Yeah, so markets that are at all-time highs are definitely harder to trade, because you don't want to be the guy that's leveraging at the top. So when you're trading all-time highs, you probably should stay long, but you have to be very careful about it. Do I avoid them completely? No. I'm just more cautious, because there's no target in mind, right? You're targeting whole numbers at that point. You're targeting half numbers. You're just trading based on price. But if the market just continues making all-time highs, you're not just trying to just avoid it. right? I'm gonna hop off here, guys. You guys already have my bias for Nasdaq, index markets, ES. Right, we have a bullish engulfing candle here, but you have to be very cautious because we took out this swing high back here. But we are very close to all-time highs. So I'm gonna hop off. I hope you guys enjoy the weekend. You guys already have my analysis for dollar, for euro. Right now, I'm not gonna take any positions, but I think if the euro continues higher, like if we get a strong weekly close, maybe next week we just get that dip lower, power of 3 for the weekly time frame, and then continue higher. That's a long-term play, right? And unless something really changes on the higher time frame, I'm not going to change my opinion of that, right? So again, I hope you guys all have a great day, great weekend, and I'll see you guys hopefully next week. All right, take care.